Welcome back to Palisade Radio. I'm your host, Tom Budrovics, and joining me today is a new guest on the show, Henrik Zeberg. How are you, Henrik?
I'm good. Thanks, Tom. Great to be here.
Great to have you, Henrik. Henrik is a macroeconomist, business cycle student, and Elliott wave practitioner from Copenhagen. I thought we could start, Henrik, by addressing the $800 to $900 gorilla in the room. You're calling for $800 to $900 gold in 2020. Could you tell us a little bit about why you're predicting that?
Yes, of course. I know this is probably the as you said, the $1 million kind of question, $1 million question. Why do I keep stubbornly stake to that kind of target? And the reason is really that the indicators, as I see them, does not point to the all-time high that everybody else sees for now. I have to say that I am, of course, the biggest gold bull. It goes without question that this winter that we have in Kondratifeff is going to send gold a lot higher, and I have targets way above $5,000. But I just see this deflationary illiquid phase still playing out, a phase where US dollar is everything, and everything will be sold off in order to get that. And then I have the whole technical model that I use a lot. All the indicators, all the markets are pointing to that. So there you have it. We can dig into or dive into some of the different markets where the indications are really strong. But this is the general picture as I see it.
Absolutely. And the reason I wanted to get you on and have you explain why we're going to head to $800 to $900 is just to make sure that our thinking as gold bulls is rock solid and we understand the timing of these events. So you have a great thread explaining the Kondratifeff seasons and the Kondratifeff winter that's coming. Why don't we start there and explain where we are in that cycle?
Okay, let's do that. So, I first of all we have to pray to give tribute to Kondratifeff, this Russian economist who was sent to Gulag and eventually killed by Stalin, as he couldn't predict the demise of market economies or capitalism. But what he came up with was really this long-term model where the economy is going through. There are some different cycles in that. And that's what we're looking at here. And the Kondratifeff seasons, the winter, the summer, the spring, and the autumn, each have their characteristics. And as I see it, and as I think many people that study this sees it, we have been in the Kondratifeff winter since early 2000 or around that time. It's it's not science. It's more of a kind of environment that is playing out. And the environment of the Kondratifeff winter is what we have here. It is a deflationary period where, due to the debt levels that have been built up during the autumn season, you'll start to see a downward pressure on growth. And despite central banks' efforts to spur growth and through monetary easing, they will continue to see that the deflationary pressure is coming through, and they will continue to see that growth is slowing. And this is where we're going. This is where we have been heading for many years. This was actually, unleashed already in the first crisis we had in the early 2000s. So during the .com crisis, we saw some of the events that we will see during the Kondratifeff winter, still in the winter during the Great Recession, and now here we have the big one, which is now. And what we see is during Kondratifeff winter is really that prices drop, and people say, well, they do not drop. No, what we see is that we have the deflationary pressure. We have consumer confidence that will be dropping dramatically. Well, that's the case for right now, as due to the Corona crisis or COVID crisis. We also had that during the Great Recession, and we will see high unemployment. Well, when I've been talking of this, a year ago, nobody said, "Well, you were down at record lows of unemployment." That's not the case anymore. So we need to understand that Kondratifeff winter is not just one recession or one crisis. It's a period of time where we, due to the characteristics of the economy or the pressures, the forces of the economy, we will be pushed into a certain direction. And due to the emotions and the and the quite recognizable patterns of human beings, because we will react in the same kind of way. We will be getting to the same point that we have seen before. Hence, we have the same kind of fallouts. So we have a currency crisis unfolding. We have a trade war. We have yields at extreme lows. I think they'll go even, a lot lower. We have seen some beggar thy neighbor. We'll see even more of that. I think that's a part of the Kondratifeff winter also, that we'll see a pension fund crisis. We're going to eventually see the run from paper money, and this is where the gold bulls are coming in. This is what they're telling us. Well, all this abundance of printing will eventually lead to new highs in golds and extreme highs. I completely share that picture. I completely share that's my point. But and by the end of the winter, we're going to see debt at record low levels. That will be the time when the politicians realize that we cannot solve this with money printing. We actually need to get a new system up and going. The last winter ended somewhere around by the end of the Second World War, so 1949, around there, where we had the Bretton Woods. And if you check that out, you will actually see that the debt levels were at record lows at that point, and that spurred the new Kondratifeff spring. We will not get there for a certain amount of time. There'll still be some fallouts. There'll still be some events that we're going to see.
Perfect. And for everybody that would like to follow along with that, we'll put it on the YouTube video and link to it in the show notes as well. So, Henrik, when we look at your outlook for gold, let's say in the coming 12 months, do you predict that we'll hit that bottom in the coming 12 to 18 months?
Well, what I'm suggesting is that, I'm suggesting that we're going to see a quite strong decline in gold. And I think we're going to see that because there will be this illiquid event. We already saw some of it. We've seen the prelude of it with oil. We saw oil being sold off, and we saw oil go into negative territory. And I think we'll get there again with oil. I'm not sure this has reached the full bottom of this yet. And what we have to remember is that there will be some oil producing countries around the world where this is actually a big thing. This will hinder them to get the US dollars that they need. And as the US dollar, as I see it, is going to strengthen quite dramatically over the coming weeks and months, we will see a very strong US dollar shortage. And there will be countries there. It can be Turkey, it can be Venezuela, it can be Saudi Arabia. There will be countries that will be in the need of getting US dollars, and that is what I think will be the reason for us seeing the sell-off and the decline in gold. And also I see that there will be a spike in rates. Again, remember, as I said during the Kondratifeff run through of the events that we're going to see, yields at extreme low levels, and I see the 10-year US dollar rate going to negative territory to -1, -1.5%, but nothing moves in a straight line. And even at this point, a small spike in rates is going to have quite dramatic effects on the market. So you have a deflationary environment. You got inflation plummeting with oil right now, and I still see some of the other commodities like wheat and others that's still going to decline quite dramatically. So we have inflation is dropping quite dramatically. We have a potential small spike in nominal yields, which will give you a very strong spike in real rates. And at the same time, you may have countries around the world in the lack of US dollars. All this combined is a toxic soup as I see it. And when I combine that with my technical perspectives, and I think, let me just check here, I can't remember if I put it in here, but I have a monthly chart at least for gold. And to me, everything that we've seen after 2015, the rally, the new bull market from 2015 is to me nothing but a bounce. From a technical perspective, it's a bounce. It has all the characteristic of a bounce. And when you look at silver that normally leads gold, you'll actually see that the highest point we had after 2015 was actually 2016. So silver hasn't reached that level yet. And if you look at GDX, which is on the miners that also normally leads gold, it hasn't moved anywhere near the level that gold has. So I see gold has been wandering off in a kind of expectation of this inflation that we're going to see, in the expectation that rates are going to all-time lows, and they will, but there might be spikes along the way. And that, actually it is also a bet that the Fed and the rest of the central banks have this deflation under control, which they do not. So I think it's a blunder, to be honest, that people see it, rallying from here and to all-time highs. I can see it higher from what we see today. I can see it even surpassing the 1920 that we had back in 2011. But it is a correctional structure, and there are different, in Elliott waves, there are different correctional structures. Do I think we'll go that high? I don't think so. I actually think something is going to happen really soon, and I see that in my weekly chart. But eventually it is going to go a lot lower. And that's where I turn again to Elliott wave to tell me how low will it go. And if we look at a normal correctional picture, you have an A wave, you have a B wave, you have a C wave. And there are some ratios that is going to play in there. And the ratio between the A wave, and the A wave being the decline from 2011 to 2015, and then what I see is the C wave from 2020, and I think it's going to be quite, fast. So will it be 2020 or 2021? Well, that gives me around the level of around 890. I think 890 is the point, or 870 is the point right now. So I stick to that because everything points to it: miners, silver, gold's own chart, and also inflation and the whole fundamental. So I share people's, perspective that central bank will print money from now on into, forever. But if that was the case, wouldn't we have seen gold much, much higher already? Wouldn't we have seen silver already, rallying and supporting gold? Same with miners. And wouldn't we have seen also that the inflation would actually start to pick up and not dropping? And that's where I think, it's a blunder. And I think we're going to see a very strong decline, which is going to be strong because everybody is positioned long gold right now. And there'll be a lot of pain and there'll be a lot of margin calls. And that will be the point actually to get in when there's blood in the street. And that's why I wait patiently. But still, I do not think I'll be wrong on this one.
Very interesting, Henrik. When we're talking about positioning yourself and waiting until there's blood in the streets, what type of, let's say, asymmetric bets are you taking to position yourself to really profit from this coming bounce off the bottom?
Okay, yeah. So I will, first of all, for now, I am only long the dollar, short the euro. I think there are structural issues in the Eurozone. I live here. I can see it. I've even been speaking with people that knew of the fathers of the euro, and there's no doubt there are some structural issues here. So it seems right to me that during this phase of illiquid environment, being long the dollar, and also my model point to this is going to be the right bet. So until I see the blood in streets with in gold, and we're going to see some real decline and reaching probably the targets, I'll be long dollar and short the euro. That's for the most part of it, and nothing else, because that's the environment we're in. When I see the bottom, when I see the bounce in the bottom from the bottom, that's the point where I think I will be getting long miners. So the miners are really the play to have for positioning yourself in the in the right way in the coming inflationary environment that we're going to see. So I have a list of 15 miners that I have been selected carefully. I have pointed out the targets, the bottom targets for them. And now I await simply us getting there. And needless to say, some of these will represent extreme value if they get to the levels that I see, and it will be something that can be quite a life changer. So I'm waiting patiently to see this happening. Some will probably say that I'll be waiting for Godot or somebody, but that's not how I see it.
Is it possible to share with us some of the characteristics of the miners that make up that list?
Well, first of all, there will be some fundamentals around it, but it is also, from a technical. I'm a chartist, and I look at things from a technical perspective. Let me just give you a reason for that, because when you have all the information in a chart, as you know, all the price info that you get in a chart is really accumulation of all the info that is in the market around that. So how would I be knowing something more of a minor or of any chart than what the market can give me through the price action? That's why I'm a chartist. That's why I use technical analysis. So what I looked at was, I need some stable miners. I need some miners that can, provide value even in the harshest environment. And I also need some miners that will, represent tremendous upside and tremendous value. And that's how I did. That's how I came, about that particular profile of the portfolio that I'm going to buy into. And so it's really from a chartist perspective, and it's some of them are the big ones, and some of them are smaller ones, which an extreme potential at the moment of the gold bottom.
Excellent. You have a lot of charts about Bitcoin as well on your Twitter feed. Do you think that some of the liquidity and, let's say, speculative money that should normally go into gold in a situation like this is going to be funneled into Bitcoin instead?
Well, that would probably be the case, but I'm not sure it's going to make a lot of change to the pricing that you will see gold reach at the end of it. I mean, it's not a race between gold or Bitcoin. I think that's very misunderstood. It is gold and Bitcoin are both representing something which is scarce. It's representing something that will not be printed, and that is why it will be something that investors will, flock into the moment that when this really unleashes this, great monetary inflation, that we're going to see eventually, and the real end game of the Kondratifeff winter. So the flight from fiat currencies will, benefit both Bitcoin and gold. I do not know too much about the rest of the cryptocurrencies. I don't follow that. I follow Bitcoin because I think that's the most popular one, and it's about also having something where there's a sufficient market behind. So both Bitcoin and gold will rally to extreme highs. And what I see is that we're going to get into a stagflation phase. It's not now. We're not done with the deflationary part yet, but eventually we'll get into a stagflation, which will benefit gold and Bitcoin. And we just have to look back in time and look for the last stagflation phase we had in 1977 to 1980, around there. Well, these 2.5 years, you saw gold rally from, I think it was around 150 to 850. And those almost 5 to 6 times is something that is going to be seen this again this time around. So that's why I also say at least 5,500 for gold, potentially higher than 10,000. There are some ratios with the Dow that I want to investigate also, but it's going to go a lot higher in the stagflation phase. And then also, not just during the stagflation phase, I think we're going to see for quite amount of time ahead that gold is going to do quite well until we get to the point of the end of the Kondratifeff winter, where I think, again, gold will not lose its value because it's not going to drop again, but it's going to be less interesting, but going to rally or rise as much as it will in this stagflation phase.
So in this deflationary bust that we're seeing coming, is Bitcoin going to drop as well alongside gold?
Yeah, I think so. I'm looking at the charts, and again, I have to say that the rally that we have seen most recently is not a bottom rally, a rally from the bottom. I see that as a bounce again, and I see the overall structure also suggesting lower lows before we are going to see the bottom in Bitcoins. And for now, I have a updated chart from yesterday where I think I'm seeing a bottom around 1,700 to 1,800, so 1,700 to 1,800, around that area. And there are some significant support areas that gives that target some credibility. So it's going to drop quite a lot more from here. And again, it plays into the fundamental perspective. If we're going to see real rates going to soar, and we're going to see this illiquid phase unfolding, I think, and then the US dollar shortage is also becoming quite severe. We have only seen what I would call the first weak phase of that. We're going to see a much more severe phase of that before we get to the end of the deflationary period. Bitcoin will be sold off to get US dollars just as well.
Excellent. So basically, we're going to see gold, precious metals, equities, Bitcoin, everything get crushed and then come back even stronger. As we know that copper is the barometer of the world economy, do you see copper heading lower because of reduced industrial output?
Yeah, and that's one of the charts I also have in my thread that you mentioned before. And what I do is that I look to copper, as you said, exactly that's a barometer for the economic activity in the world. And then you have other charts, other commodities like wheat, like gold and silver also, that will be more of the price level. And if I look to my long-term chart, and that was quite interesting, when I looked at it from an Elliott Wave perspective, I saw and I got to the conclusion that copper is going to bottom out in the long-term perspective much later than some of the commodities. And I was staying neutral to all of this. I didn't come up with the fundamentals first. So I was asking myself this question: why is it that I see a structure that potentially could end up bottoming out somewhere in late 2021 or even 2022, and I came up with the perspective, the fundamental explanation that what we're going to see is a decline in activity now for a certain amount during this deflationary bust. But then, because that's what the Elliott Wave tells me, we're going to have a sideways movement for quite some time, which will be a wave 4, which can be seen in the thread. And that will be enough to spur a lot of positivity into the economy. I think we're going to see that we will have a feeling of that we beat deflation and activity will start to pick up to a certain degree, but not really getting the employment back in as we hope for. And that's why we're going to see an economy that will slump while prices starts to pick up, because that's what my chart shows me when I look to all the other commodities, and I look to oil as well. I think oil will have a major secular bottom. That is a very, very long-term bottom. We'll never get to those levels ever again, of course. That will be within 6 months or so. But whereas I see the economy will slump for another couple of years. So the difference tells me that the oil chart and the copper chart then tells me that we're going to see economy slump, but prices start to pick up, which will be stagflation. And that makes sense. I mean, it makes sense that all the stimulus that has been put in there now to fight the corona will actually start to circulate. And also, if we look at the velocity of money, which is another thing I also look for, it's going to bottom out really soon also in the Elliott Wave perspective, meaning velocity of money is going to pick up. And that has been during the entire winter phase of Kondratifeff, the reason why we haven't seen inflation. So if you start to see a pickup in velocity and you see oil is bottoming and you see other commodities will be bottoming, what do we see the economy slump, then we're going to have a stagflation phase for a certain amount of time. And that is going to be, as I see it, the real crisis. I mean, this deflationary crisis, we know what to do about that. That's about pouring in a lot of money to it, liquidity to it, and stimulating. But the moment where inflation starts to pick up and the economy slumps, well, the whole Fed game is over. That, I think, is what people also tend to forget when they talk about how much the Fed has unlimited firepower. They don't. They have a firepower until the moment that the inflation starts to pick up, and then that firepower is gone. So I think it's a little more nuanced than what we sometimes hear. And I think that, of course, they are going to beat deflation, no doubt about it. But it's just about the road to there, and then the stagflation. How severe is that going to be?
Absolutely. That paints the whole picture for us. Do you have any concluding thoughts as we wrap up here, Henrik?
Well, I think it's about patience. I think it's about being patient in a market where everybody sees the same thing and everybody goes to the same side of the boat. I am not blind to the argument of course, gold will go higher. I can see that. But when I look at all the indicators and when I look at the sentiments and all that, and I look at Elliott Wave also, I will have to conclude that there is a phase that will come first. And we know that the market always tries to make, a fool of the most people. So a strong sell-off phase, we just have to keep an open mind to it. And to me, it's quite clear. So I will stick to that. And I could be wrong, but for now, I'll stick to it and then see what happens the next coming days and weeks.
Excellent, Henrik. Well, we appreciate your insight there, and we're just trying to make a stronger argument for the the timing and the way we're looking at things as well. As a reminder, we'll have all these charts up on the YouTube video, and it's a great Twitter thread to check out, as well as your Twitter following, Henrik Zeberg. And you have a newsletter and website to be launched soon, correct?
That is correct. Yes, I am in the final test and preparations in launching that, and it will be a website where we will have a live stream event every week where I'll be discussing, because it will be live stream, there will be possibility to ask questions. So being able to actually interact with me on some of the charts and ask some questions, and I'll be elaborating on why I see the charts as they are. So it's not just a picture that might tell more than 1,000 words, but I think elaborating on them will be even better. So there will be that, and there will be some theory and educational section also, which will give people an opportunity to learn a little about my methods.
Excellent. Well, we'll stay tuned for that. Thanks for your time today, Henrik.
Thank you very much, Tom.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?